TGIF, King Dollar, something you may want to write down. I've seen it happen so many times on these big formations that usually the first breakout is a fake out. This breakdown, I don't believe is. Of course, if we got back above 1340, then you'd have a double fake out, but this looks real. We still haven't accomplished making a new high. There's some buy stops sitting here, 9769. So, we're not there yet. I've been talking about the potential of the dollar rallying into, I follow, the one thing I do follow from GAN that's simple is that I look at where markets are going into the change of seasons, and I believe the 21st is the winter solstice. Sometimes markets reverse into a change of season, just like nature has seasons, the markets do too. So we'll see what kind of winter is setting up. I suspect a failing rally that we won't take out, of course, this 104, but maybe head up towards 99 to par. The only constructive thing I could say is with the dollar threatening to make a new high, if you want to look for something positive in the euro has not taken out the 1220 low. Okay, so definitely I think it's kind of ironic that a lot of the sell-off here that we're getting in stock indices is, some of this Mueller stuff is starting to shake confidence because, really a lot of this from the election, almost all of it, right, was the liftoff for a Trump rally. So we'll see. Actually, there is some all right, decent action that even though we're getting creamed today, we're still holding this low. So we'll see what happens there. You're going to have some nice divergent signals with down the road. We haven't quite made a new high in NOK. So a lot of these things you're going to be looking for non-confirmations in the USD NOK. I think the SEC isn't going to be here. Let's see what the Swiss is doing. So something I brought up to Steve, I go, well, wouldn't that be a nice market tell if the dollar index got to those objectives and US dollar Swiss was not making new highs? So that's something else to really keep an eye on in the following weeks. Maybe all we do is get back to 110.50, but this is pretty weak response so far. So another 150 points or so in the dollar index may not create a new high here in the US dollar Swiss, and may just, maybe 61.8 back, 78.6 back. But this is going to be a prime candidate because you look at things under ideal conditions. If markets aren't doing what they could do or living up to their potential with a tailwind, what happens with a headwind? That's what I ask myself all the time. So Swiss is not making a new high. I think the pound's not quite at new lows, but it made new lows this week. Aussie's still way off its high. So, this is pretty constructive. I'm going to be interested in the Aussie. Maybe it doesn't even make a new low, maybe another 100 pips or so. So we'll see. It's taking it on the chin today. And tip of the hat to Blake. He showed a trade on a pair that we don't even cover in our service and shared it in here for free. I think it had the Kiwi in it. So it may have been Kiwi yen, or I'm sure Blake will fill us in.
Canadian.
It was Kiwi Canadian?
Yeah, New Zealand Canadian.
Yeah, oh, okay, yeah. What an esoteric pair, man. So, I'm thinking that like you explained it, a lot of it was fundamental too, wasn't it, buddy? Because you thought that it was really a short squeeze that gave the Kiwi the relative strength over Aussie the last several months.
Yeah, I think it was position squaring is over, and then crude was holding up, and with possible risk aversion was going to hit the New Zealand harder than it would the Canadian. So anyway, yeah, I mean it's the New Zealand Canadian fell out of bed overnight. It dropped pretty aggressively, about 100 pips from yesterday's highs, and I closed out a lot of it overnight. So it's been a good trade.
Nice, man.
Thank you.
So here we go into the end of the week, and the dollar index not that far away from. I know that Blake and Steve have some numbers. Blake was talking about, I believe, this 61.8 back from the whole rally, 97.80-ish or so. So we're almost there. Should be there by, could be today. So we'll see. The measurement of this and why I think it's 99 is I just take this, Blake, just the width of this and then tack it on from the breakout. And that's how you get 99 or so. So we'll see. But the dollar finishing the year it's been a pretty good year in the dollar, just like the year before was a bad year in the dollar. Maybe we're setting up for this being a failing rally and a bad year for the dollar in 2019. What do you think?
I think that's possible. I've been sitting here looking for a turn for the dollar for it to turn lower, and it's been a tough trade, and I have to give kudos to Amanda. She's been just absolutely crushing it, being long dollars, and even though I wasn't short dollars overnight or anything. I didn't have any dollar exposure. Overall, it's been, but it's been a tough trade. But I'm going into next week, and unfortunately I'll be traveling on Wednesday, but going into the FOMC, I think the risk is that the euro, sees 112, dollar index sees that 618, and then the question is, how does the dollar respond post FOMC, especially with all of the pressure that the Fed governor, Fed chair Powell is getting from the Trump administration. Is he going to buckle? And Trump doesn't want him to raise rates, and there's a 70 some odd % chance that he's gonna raise rates. Going into on Wednesday, but how about if he stutter steps? I don't think he's going to not raise rates, but how about if he does, basically, gives
another statement that they're going to moderate it, data dependent, that kind of
we almost
hieroglyphics,
one and done from here. And if that's the case, we were just looking at, and
I doubt that.
I doubt it too, but you never know. I mean,
yeah, sure.
If you're the Federal Reserve Chairman, you're supposed to be non-partisan, non-biased, and but when you have the President of the United States yammering at you, I mean, it's got to weigh on you at some, you got to go, it's gotta give you pause. And whether it will or won't, or ultimately affect the board's decision, I don't know.
Maybe if President Trump didn't have all these problems and he was in a stronger position, it would have more effect. It's almost like, maybe Powell has more job security than our current president.
Yeah.
Anyway, just, it's getting pretty surreal out there.
It is, and so again, I think the risk is that at this point, the dollar, if we have any whiff that the Fed is becoming hesitant, and they raise rates, and it looks like a bleak outlook for rate hikes going into 2019. The dollar could very easily reverse. And so when you're looking at, and by the way, you've been calling the dollar index higher, so well done, Dale, as well. But you look at the dollar and you look at that pennant, that triangle. the 618, you know, we could do a false breakout above the highs. I think the 618 ultimately is going to be tested in the dollar index, which takes us to 80, whatever that is, you know, 97, 80, yeah, 97, 80, 98. And then we're going to have to see how it responds from there. I wouldn't want to be long the dollar at that number, at that 1.8. That to me is too close to Wednesday. You know, now we come away from Wednesday and it looks like the Fed's going to continue to raise rates and expectations stay the same, then I think that's the green light that you buy dollars going into year end. So,
you know, that's a great point. So if the breakout is, you know, it looks like it is a breakout, you know, it's important to, as you get more information, earlier I was saying, you know, if the dollar takes out for sure this 96.40 under this moving average, there was problems initially under, and then up to 96.80 as support levels continue to grow. But, you know, now you have, you know, you have kind of a line in the sand for a continuation of the move, and then you'll kind of know it's done, Blake, maybe, you know, when we close back under here after wherever we go.
Yeah. And so again, I'm not trading. I'm more interested when I land to kind of see where the market's at and see if we reject the 618 or we're above it. I'll tell you, between now and Wednesday,
Fed.
Yeah, I would assume the dollar is higher. I mean, these European PMIs were weak, and you look at the euro yen. The euro yen looks like it's going to break down. You look at the euro. Euro looks like it's going to 112. You got a bear flag on the Aussie. You've got it doesn't look good for the dollar, right? Or excuse me, for the euro.
King dollar back on the throne, and we'll see how long the reign is.
Right, and I do think that the dollar is going to eventually come under a lot of pressure. I think this right now we're seeing the benefit of the dollar is benefiting from the trade war, but I think ultimately it's going to weigh on our economy and probably the global economy, and I think the dollar is going to be a sell. But that doesn't mean that it is right at this very moment.
You know what could be a catalyst into next year is, you know, that was a pretty important Senate vote for us to withdraw our support of Saudi Arabia's war with Yemen. Okay, so, you know, I know for many years a lot of people have been talking about if anything happens in our relationship with Saudi Arabia, that would be another de-dollarization thing where they start taking payments in other currencies. And this is a big deal to them. So, you know, if this relationship breaks, I think they could retaliate that way and, you know, come off the dollar-only payments.
Yeah, it's quite that's really possible. I mean, they've been and those have been threats that have been around for a decade, as far as I can recall. But it's, you know,
you know what. You know what I was taught, and this is my last interruption, Blake. I guess I had too much coffee this morning. Is that, you know, when you're in bull markets, like, you know, we're having a pause in at least right now, anything that can go wrong doesn't. And when you're in a bear market, anything that could go wrong does.
Yeah.
You know what I mean?
That's what the market focuses on.
Yeah.
By that definition, I'm not really sure we're still in a bull market, because as you see lately, we've been taking even what we were expecting as positive news. For example, Trump coming closer with Z was considered, you know, like something that would bring back immediately like risk-on activity to the markets. We saw that happening, and we haven't really seen any risk-on since then, right?
Yeah, one day.
The Fed showing more willingness to use hawkishness was considered from the market to be something that would immediately produce risk on. That didn't work either. So having to do with how the market has been reacting to theoretically good news, it's one of the reasons that I've started wondering if we're still in a bull market. The evidence, of course, should always be in favor of the longer trend. So I don't get misunderstood. but I'm taking notice of those things.
Yeah, and Steve, I can honestly say that I don't believe we're in a bull market. I think we're in a consolidation. But one of the things, if you look at equities, we're trading at the lower end of this range, and frankly, we're below like long-term trend lines right now. So I think the risk is the S&P breaks through 2,600, and then
I agree 100%.
Then we have a problem. Then we have a situation where you got people playing into seasonality, buying stocks at the end of the year, thinking the Santa Claus rally is coming, and the market craps the bed, and it's going to catch everybody off guard. So I think the risk right now is stocks start moving lower soon.
Even I said that yesterday here as well. Even by just looking at the 3 last daily candles, all of the last 3 days, we attempted early on the day to rally. We managed to rally intraday, and every single time, at a bigger or smaller extent, we failed. And that is definitely not a bullish sign. I mean, it shows like the bears are really not giving up. On the other hand, it looks like the bulls might be very, very close to giving up here, at least at this level.
Yeah, this reversal candle was suspect, wasn't it? And every rally, this is a pretty weak rally, unless, Steve, we get A and then a higher low and then C. So, that's possible too. We'll see. But yeah, it seems like the buying the dips don't have the same type of zip that they've had, I don't know, for forever.
Yeah, for sure.
Yeah.
So today, our last piece of data, and here I'm going to take over the charts just for a minute, Coach.
Sure, buddy.
I got it.
I love your charts.
Okay, so yeah, here's the S&P, and we're let's not forget we're below this major trend line, and if you look at the Dow is really underperforming here. The Nasdaq looks extremely heavy. I haven't done a lot of work on the Nasdaq charts in a while, but you can see I've got fib levels all over the place that don't really even make sense anymore. But you can see the 78% retracement is right here, and we're closing in on that. And we're well below the 200-day moving average on the Nasdaq. The S&P is below the 200-day moving average. We got the death cross. The Dow, below the 200-day moving average, and we're really underperforming here. So you can see like this support's really starting to weigh on the market. Matter of fact, let's you can probably grab this, grab a rectangle here, go through this support through here, and that's where really key support for the Dow is going to come into. But I think the equity markets look pretty weak now. If the equity markets break lower, the layup short right now is the euro yen, in my opinion, because you had extremely weak PMIs. French PMIs came in below the 50 mark, which shows contraction, not expansion anymore. It's contraction. I think that this might have been, and let me go take a look really quick. French PMIs below 50. Let's go manufacturing or services. Let's take a look at services. This is the first time we've come below 50 since 2016, which is a brief stint. But everything that's happening in France right now with all the protests and the riots, it's got to weigh on probably sentiment across the board, and you can see PMIs are dipping into negative territory. Look at here's the Eurozone PMIs that are getting close to contractionary levels, and we haven't been in a contraction since coming out of the financial crisis. So this is.
Blake, sorry to interrupt, but it also matters. Just look from where we've fallen to 50, right? I mean, that peak that you had there above 60. I mean, it's clearly that we have downside momentum. It's not only that we're getting close to 50. It's look at that.
Yeah.
So there is the clear. Yeah, exactly.
Yeah, and so you've got really weak data in the eurozone, and I think U.S. is probably going to look somewhat similar moving forward. But you know, you have the euro yen that, in my opinion, is at risk of breaking lower and, you know, breaking back below 126, maybe even below 125. And if the S&P breaks 2600, the layup short here is the euro yen. Then you have the Aussie
yen
dollar
too.
Yeah, actually, Amanda this morning she posted that we have the bear flag is in play in the Aussie, and you can see she did that in the ForexAnalytix community, and you can see that the Aussie dollar actually points to trend lows now, which is bearish, obviously. But you know, you match that with, you know, here's the dollar yen, and I'm sure we're going to wait until we have retail sales here in the U.S. That's our last piece of data that's coming out in the next 10 minutes. Well, that last piece of major data that's coming out, and the U.S. dollar Japanese yen is kind of hovering around in this triangle. But you know, if it's a weak piece of data, we could very easily break back below 113.50 and, you know, come back down to 112 and change. And then you know, you got the euro yen that's poised to break down. You got the guppy. And that this is actually a rejection. So let me remove that from the underside of this trend line here. You got the Aussie yen that's, you know, could very easily slip back to below 80. You have the New Zealand yen that I think was just a big squeeze. And I just exited the Canadian yen pattern and play that we had, because frankly, risk appetite looks kind of weak. So and the Canadian yen's been doing pretty well, but that could change here. So anyway, I think the stock market looks vulnerable. You know, the euro looks extremely vulnerable at this point, and we look like, in my opinion, we're going down to the 112 level, and it's been very choppy while we've been in this triangle. Been very whippy, but now it looks like we've got some resolution with today's move. So if you don't want to trade the euro per se, but I think the euro yen instead of the dollar, excuse me, because of the numbers, then the euro yen's probably the better trade. You know, we've got a false breakout of this minor triangle here, but the bigger triangle rejection, and yeah, below 128, and it could really expose some downside in the euro yen. So that's kind of what I'm looking at right now. And one last thing that I want to point out too, and I won't steal Steve's thunder too much, but you know, gold, we tried to break out, and we really tried to break this 1240 level, and we were holding it until last night. Then gold broke down. Silver is at, you know, range highs, basically range highs.
Steve had it as a breakout, the other day. So this has negated that breakout, right, Steve?
No, coach. If you remember, we were monitoring two
Steve called
areas.
This a breakout?
Nope.
Steve, you don't, man. What were you looking at?
Nope.
So
okay, I guess I'm wrong.
Steve did it. It was
Coach is wrong, because we were looking at two things. First of all, the rectangle. It's a very clear rectangle, which if we close above 1480 on a daily closing basis, that's when things start get going. But there was also a minor descending trend line resistance, which we did break above. But I mentioned specifically yesterday that I'm not paying attention to that, because, you know, for me, 1480 is the line in the sand. So, you know, only if I see a daily close above that, I can you know, look at this as a rectangle breaking to the upside, in which case we would be looking for an extension of, you know, the width of the rectangle, which is roughly $1. So this is a failure.
Yeah, Steve, your analysis, jeez, just kidding. So hey, one last thing, you know, and you know, we have a situation where, you know, the UK could quite possibly exit the Eurozone without any type of Brexit deal in place, and that could almost be viewed as a black swan event, because no one really expects it. And you know, and that's something that we have to also watch very carefully. The cable really failed this week on trying to move back above this 126.60, and we just couldn't. And so, you know, I think we got to watch the cable closely and see how it weighs on risk. But anyway, I'm going to pass it over to you guys. I just want to say TGIF and thank you all for being here, each and every one of you guys. You know, especially thanks to those of you that are part of the ForexAnalytix community, meaning in the chat room. We really appreciate your support and your patronage. So thank you very much. And Steve and Coach, I'm passing it over to you.
Have a great weekend, Blake.
Thanks. You guys have a great weekend too. Thank you.
Perfect.
Hiya, Steve.
Good, Coach. Good.
How are you? Okay.
I'm good.
You know, all I know, I want to say this to everyone: you better not cry and you better not pout. I know where you're. Okay.
By the way, evening star formation for silver, since we were mentioning that, right? As you see, we never made it the rectangle evening star formation, so I think that that keeps us in a range. And as we've said, the more we stay in a range and don't break higher, the higher the chances of a failure. Anyhow, we expected
God,
the failure.
I hope we get that failure in your downside targets, because I'm backing up the truck down there.
Oh yeah, me too. I'm really looking forward to seeing a new low in gold and silver. I mean, I would want to see gold, you know, near the 1,000 level. I would want to see silver roughly at 12 something, because we have here a target 1275, the 127% extension. I like those targets very much.
Yeah, I'm thinking 1120.
Can go lower.
1120 and not quite 1,000. I'm sure people will be talking 1,000, then maybe 1080. But I think that 1050 low that we had a few years ago, I think it's going to hold.
We have 1214, the 141% extension. Let's see the 161.8. 161.8 at 1130, actually. So that's the 161.8% extension of this this last rebound from the flash crash low to that high. So it's at 1127.
Yeah. Okay. Cool.
Yeah, so that would be lovely.
A lot of great things setting up for 2019. You know, I don't think anything changes till we get that dollar top. What do you think, bro?
I didn't want to interrupt Blake before, but listen, what he says is right. There is a chance that we're going to have not an orderly Brexit. If that happens, expect the dollar. Expect the dollar to be on fire for a period of time, because the knee-jerk reaction from the market is going to be a weaker pound. Yeah. And as you know very well, the euro cannot diverge very much to the pound. I mean, in this case, the euro should overperform the cable, so the euro pound should move higher, which also aligns with how it looks technically. But both of them should dump against the dollar.
Just the pound harder, you know, like like today. Yeah. Look at the board today. You know, 100 lower in cable and 70 in euro.
So personally, given the fact that we're just breaking out from this symmetrical triangle, because you can see like a symmetrical triangle within this ascending channel, I believe, and I said it yesterday as well, I believe that the confluence that we had at the 61.8% here at 97.80 something is not going to be enough of a target. I'm personally looking higher towards 99, and that without considering the bad case scenario, as I said, with Brexit. Because if we do get a bad case scenario with Brexit, I doubt it that 99 is going to be the top. I think that just within a single day or within a couple of days, the dollar can have a strong enough rally to penetrate through that area as well. So given that the Brexit situation is going to, calm down, I will be satisfied with the target roughly at 99. But if we take into account the possibility, and if that matures, I mean, something like a bad case scenario, like a disorderly Brexit happening, I think we're headed higher first, higher than 99. I mean, So if you
what do you
remember,
have above it? You have any numbers above it? Like
sure, we can zoom out and we can see.
102.
First of all, there is a zone here at 100, roughly at 120. The 78.6% of this move lower comes at 150. So that's the next area I would be looking for, like between 120 and 150. And after that, we have the 102 area, which is an interesting area. As you see, it has acted as a resistance support in the past. So above that, it's 102. So bottom line, if you remember, I made it clear yesterday as well that I would want to see a resolution lower for the Euro USD. And also, we were at a nice level to reject the cable because we were retesting, in essence, this broken symmetrical triangle. So this is a healthy pullback for a market from a market that's breaking down. So I'm now looking lower towards the 161.8% extension of this range, and it might even end up being the 161.8% extension of that range. Depends on what you how you want to interpret where you want to interpret that the beginning of the triangle is. So I would definitely be looking lower. I think that we're definitely going to tag the 123.60 area, which is a horizontal support area they have, but it's very, very likely that we're going to even move lower than that towards 122. If you remember, Andre also had
21.
122. He had it as a target. I don't remember for which exactly harmonic pattern, but he had it as a target. But it doesn't really matter. You know my opinion, not much has changed about that. We have Gregor with us, so I would be very, very interested to hear. I'm pretty sure that he agrees with me that we're seeing definitive continuations in the vast majority of the dollar pairs higher. What I would want to hear from him mostly is where are we targeting now? What are you looking for, Gregor? What targets are we looking for now from an Elliott wave perspective?
Wow, the Wizards here today? Oh my
Yes.
God. What a great way to cap the week off.
Where's Blake? He's already left.
Yes, yeah. He's already left. When I told him that you're going to be here, he was like, "Oh my God, I can't stand."
I got it. He said, "I got to run."
I'm just looking his picture of new house. So I'm just wondering.
I'm kidding, by the way. But by the way, let me say I didn't interrupt.
I'm saying that I was just looking at his new house picture.
Give me 1 second. I just want to say that retail sales were marginally better, 0.2 versus 0.1. I didn't want to interrupt before because it didn't really make much of a difference. Previous revised higher from 0.8 to 1.1. So the data are actually better than expected at least in this case. So that should help a little bit with the dollar as well. So tell us what you see, Gregor.
On cable.
Yes.
Firstly, on cable, since it's very interesting topic because of Brexit, I think that we are moving here on the 4-hour chart impulsively to the downside, and it appears that new lows can be seen. So I'm looking for 1.24 level, but still wondering what will happen once we reach a new low here. I mean, there's so much negativity around this pound that I really don't want to be too aggressive based on from a crowd perspective. I don't want to be too aggressive on the downside, and I'm still curious if maybe we'll see some kind of a surprise and actually a reversal to the upside.
I agree with you. There is going to be a much bigger response to a positive surprise because, as you very well said, the extreme one-sided positioning is going to act like gasoline to the fire. So I totally agree with you. If we have some kind of a positive surprise,
exactly. So investors, traders will want to grab any positive news from Brexit very quickly, probably, if there will be something, and definitely something will be, I believe. So I would not be surprised if cable would stabilize by the end of the year. But still, firstly, we have to see a completed 5 waves of decline, and looks like the euro-dollar, as you said yourself, it's headed even lower. It looks like that this wave B is going to see a retest of these November lows. So we are falling here out of a triangle probably. As you know, in the last webinar, I said that I'm tracking 2 wave counts. One was very aggressive 1-2-1-2 scenario, and I was looking for a bullish continuation only if we would see this level taken out. And on the other hand, of course, we presented this bearish wave count, a triangle, which means more weakness can be coming. And it looks like that's the case now, especially since today. Also, it's Friday. I mean, if we will close at these levels, then really we shouldn't be surprised by a drop to a new low very soon.
I totally agree. I also believe that we're headed to a new low. I don't believe that 112 is going to hold. Because you know how the market is. The market is going to first take out the weak hands. So even if euro is to reverse higher, I do believe that it's first going to take out the recent lows and then do that.
Yes, exactly. And also we have a triangle. We know that after a triangle, we see a final thrust lower. So yes, technically speaking, a lot of traders who were on the sideline now will try to jump on the short side. But normally that's too late because price will already be at new lows.
So you're viewing this as a B of a double zigzag, right? Of the second zigzag of a double zigzag. I see, right?
Yes.
Okay. Grega, what do you think the probabilities are of us getting to your 1.382 target? Looks like it's probably around what, 108 or 108.5, and that's on your 4 hour. You have it stopping at 123. But do you think we could go 138, drop, a lower target? I see a fib extension down there at...
Yes, exactly. I mean, this is my region where I would be looking for potential stopping point of this wave B, because that's actually extension of this wave A. So normally if you're in wave B, I'm looking for a maximum towards 138.2. Of course, there can be even extension towards 161.8, but that's most typical if you see some kind of a fake breakout to the downside, then quickly reverse. Then fib levels will act sooner as a support than extend the target. So yes, I'm looking for this level, and then we'll wait to see a 5-wave rally from the lows. But what I'm trying to say is that I'm still looking for a wave B, so I'm not going to be any aggressive bearish on the euro dollar, especially because this decline from September highs is, despite lower prices, very slow compared to the previous declines.
And very overlapping.
Yeah, so I am expecting price to stabilize at the lows. And also, if you take a look at the dollar index, dollar index 4 hour, I was looking for this wedge earlier today, and we are now at a higher high. But you know, if maybe we will suddenly see any reversal to the downside, it wouldn't surprise me at all. But I know that, and I realize that euro dollar has still room for more weakness. So I'm more favorite of this.
That's why I'm looking towards 99, Grega, because I believe, since you know very well that euro on its own has 58% of the weighting of the index, I believe, and since we both believe that we're going to see a new low, I believe that we should at least make it to 99 with the dollar index. That's why that's my first target.
Okay, I'm looking at 98 or so, but you know, we can be very close to this phase of a potential ending cycle. So that's what we have to keep in mind.
Yeah, I totally agree with you.
If we suddenly see a reversal below 96.80, then seriously, we have to start considering a top in place. And of course, euro-dollar count would have to be adjusted in such case. But the idea is that I don't want to miss any aggressive selling once it occurs. So definitely 96.80 is always on my map now.
That previous low, the last low, the E of the triangle that you're counting there, right? Yeah,
exactly. Because
beautiful, Grega.
Clearly, but that's analysis. You know, when it comes to trading, you know, my style, I will always try to wait or look in the direction where the market is currently moving. So despite my analysis, which suggests that we may see a reversal lower, this is not the case. I can be wrong. So rather than looking and waiting or trading in this or shorting dollar, I want to be looking still for trades where dollar is looking strong. So dollar Swiss is looking interesting. Aussie dollar bearish direction is also playing out very nicely. So these are the markets where you have probably greater probability to be right when you will predict your next move, rather than just staring into the euro dollar, which has been really on no man's land for the last few weeks. So if we take a look at firstly maybe a dollar Swiss, we have seen a free wave setback here on the 4-hour chart, and we are now recovering, trying to close. Probably we will try to close today at above this trend line. So in such case, I think that we will see more upside coming, and dollar Swiss could really be starting to moving even impulsively to the upside. So I'm really interested if we will see, of course, a 5-wave rally from the lows. For now, we are in a wave 3 or maybe wave C, but there is room for parity to be seen in the next couple of days.
Keep in mind, though, in comparison to the Euro USD, as long as risk is under pressure, Euro USD should overperform, Euro USD shorts should overperform the USD Swiss longs. Now, of course, if we find a bottom in the indices, then that should completely reverse, and then we should see USD Swiss overperforming, USD Swiss longs overperforming Euro USD shorts. So in my opinion, since I still see the indices under pressure, and I think there is more downside there as well, I think that if somebody wants exposure in the short term, because you very well said, Grega, that you wouldn't be committing to those positions, to those dollar positions for a long period of time, because we might be at the final thrust. So, you know, since we're talking about shorter term positions, I think that for the time being, perhaps short Euro USD, given where risk is, might be a better idea than the USD Swiss longs. I don't know. What do you think about that?
Yes, I'm just trying to see what Euro Swiss is doing. So
Euro Swiss is dripping lower still.
Okay, just let me find the template if I have it.
Steve, remember I said Dixie could make a new high without US dollar Swiss? I mean, so far it looks like I'll be interested if we get to 99 in a Dixie to see where US dollar Swiss is, especially if it's not making a new high.
Yeah, which is very likely, Coach, if still risk remains under pressure.
Yeah.
We have some kind of a wedge shape here, and it's very, there is a aggressive decline still, but with overlapping price activity. So I would be really curious to see what.
Any chance that that's not going to be a wedge, and it's going to be
like Naples, you mean?
Nah, third wave. That can't be a third wave. Too overlapping for it to be a third wave. Any chance that it's part of a bigger? I mean, it's part of a bigger C, of a complex C. So it's only part of the C wave lower.
I would be looking this probably as a leading diagonal. And
then a 2. Yeah.
And then see our corrective recovery and then lower. But maybe these previous lows will be retested before we see it move downside.
Yeah. Okay, so there is a bearish probability. Yeah.
Yes, I would be expecting more weakness here. I mean, we also reversed from this very level, as you know yourself, 1.2 level. So, I mean, it clearly wants to go away from this.
Yep.
Hey, Greg. Oh, I'm sorry. Go ahead, guys.
I mean,
especially if we are to go in a recession or whatever, as you understand, 120 is going to remain as a ceiling from the markets, right? Because if we go into a recession, one of the currencies that undoubtedly maintains all of its risk off and safe haven properties is the Swiss franc. There's no question about that.
Yes, I agree.
So, Grega, one more thing that I was looking at is the fact that the Aussie Kiwi, after breaking below the triangle, is correcting higher at the moment. So I know that a lot of people might be seeing the move lower from the Kiwi being more impulsive, but personally, I think that sooner rather than later, the Aussie should continue underperforming the Kiwi. What do you think about that?
Yes, I mean, we probably completed this triangle here in a fourth wave. So definitely I'm expecting more weakness for sure. But after a corrective recovery. Now, if we consider that this was an extended 5-wave fall here for wave 3, that now we are in a wave 4, then we may retrace back to the wave 4 of one lesser degree. And also here was this wave X, which was also can prove to be a very nice resistance area at 106.50. So 106.50 up to 107, where is also this falling trend line, I would be looking for a new drop. But after 3 waves of recovery. For now, we have only a sharp rise here, and probably even impulsive here on a smaller time frame, as you can see. So looks like at least temporary low is in, and that correction will take us higher.
If it's impulsive, that makes it a zigzag, because zigzag has A and C being impulsive waves. It's a 5-3-5, so it might just prove to be a simple zigzag, right?
Yes, of course. But the idea is that the correction is not completed. That's
of course.
And
but
also,
we should continue lower sooner rather than later. So Aussie should be a better short at some point in the near future than the Kiwi.
Yes. Regarding the direction of main trends, definitely.
Yeah.
But of course, both can play out very well.
Okay, Greg, how about dollar making almost at new highs and gold still holding up okay? Is this a pullback to buy in your work, or are we rolling over
gold,
again?
Did you check gold? I mean, it fell right now very sharply, actually, to 1.
Yeah.
Before, and looks like that this is now quite aggressive break below this trendline support, and also below this channel as well. So we can be turning down, especially because we have seen a move above October highs for just very short.
So we satisfied the minimum requirements. Yeah, but we satisfied already the minimum requirements, and add to that the rejection from a major resistance level for silver, and I also think that the chances have really increased that we've already started the next leg lower in the metals.
Yes,
I'm with Steve.
Also, what I wanted to highlight with Aussie dollar is, Aussie is very weak.
Right.
It lows. And finally, now again, when gold maybe completed this corrective recovery, and now both are again trying to turn in the same direction, to the downside. So
love that correlation. Do you find, Grega, that gold is usually behind the Aussie, kind of leads it by a week or so, a lot of the turns? Well, not down there, it didn't.
Yes, but I noticed that it was lagging a bit, but then sooner or later, or in a few weeks, they always came back together. So I would not be surprised if this is now the right timing again to track both. So now imagine where Aussie dollar can go if gold maybe goes back to 1200.
Yeah,
I think that if we are actually failing from here, gold is going to go much lower than 1200.
Yes, of course. I mean, after all, we already see evidences of a corrective recovery, and that's very important. So it can be just a matter of time when we will finally see a reversal lower. And very important, like Dave said, we don't have a follow through to the upside. So
be careful.
I think both the metals, gold and silver, in big danger of huge failures here.
Silver bells, silver bells. You know that one, Steve?
Nope.
All right.
Silver, now imagine silver. I mean, silver is clearly consolidating below
rectangle.
This triangle.
From a basic technical analysis perspective, this looks like a rectangle, which is more often than not a continuation formation as well, like a triangle.
So now imagine I mean, what kind of drop we really may see here on silver. And if I show you the next, I mean, probably you're now wondering what I see on stocks. And if you take a look on the S&P 500, I'm sure that there will be even more people becoming even more aggressively bearish once we will finally approach these February lows. Okay, but in 2017 we were in uptrend. In 2018 we are trading sideways on stocks. So I would not be surprised if in 2019 we will again see an uptrend, because after all, I want to stay within this trend that is with us forever. Actually.
Forever.
Yes. So
when we were only an idea in our parents' minds.
So,
for me, that's a long time ago.
So actually, February lows once will be retested. I mean, it really could be an interesting opportunity for our new reversal to the upside, especially if we consider that this can be an ending diagonal maybe forming. Definitely, it's a wedge that may suggest a reversal from a new low. So if this, in combination with an ending diagonal, in combination with these very important February lows, which maybe can be spiked out and we see a bounce after that, I mean, this could really be a very nice technical bullish setup.
Greg, what is the level under which you abandon the idea that this is a corrective move from the S&P, and you start looking at it as
that this is not a corrective move?
Yes, yes. What is the level under which you will say, perhaps this is something totally different, and I need to, find an alternative count that will count it as the beginning of a motive wave down?
So from experience, we should be looking at each correction on stocks, at each pullback on stocks as a correction.
Oh, I agree with you. There's no question about it.
So, of course, I mean, 2,400, maybe even lower.
Okay.
I mean, this is very interesting. Probably, I would say, as long as we are above this channel, okay, I would remain in uptrend. Now, this is a base channel. It's starting at the start of this red cycle, okay? I'll put the parallel line at the top, and as long as wave 4 is consolidating above this lower trend line of this base channel, it means that we can be only in corrective phase, because wave 4 can also find a support at this lower trend line. But normally it finds at the upper trend line, and we are now at these levels. Not far away.
But from what I see from your analysis, we agree that the next short-term move is most likely lower, right? Because they look very heavy.
I'm expecting
yes. Yeah, me too. I'm strongly in favor of more weakness here in the short term.
But if we see a bounce, if from any reason we see a bounce today, and we go back above 2690, back above 2700, I mean, then we should starting considering that this is actually a triangle in a wave 4.
Okay.
And so this should also be on our radar for sure.
Yeah, quite possibly. By the way, speaking of triangles, crude looks like being in a symmetrical triangle, so that makes me think that there is more weakness before a rebound. What do you think about that?
Yes, but I would be very, very careful with crude oil.
Me too. I would not be selling here. In no way I would be selling here.
Yes.
I would be buying. I would be buying another low. I would be buying it for sure.
I mean, problem with crude at this level, I mean, it's still very good technical level and very good risk reward for shorts. But what I don't like is this very sharp price.
Yeah.
So if this is a very sharp price, it can be treated as maybe even as an impulse on a lower degree, right? So it means prices can take us even higher, because also we have to consider that triangles, right, can occur in wave position.
B, yeah. So the whole triangle might be B, and there might be one C missing to the upside, and then more weakness, right?
Yes. So this is a triangle. we are not can be now in a wave B, and we see another leg to the upside. And previously we were trading lower, right? So it can be in a wave B, which means we will see a reversal lower.
Or the triangle is the whole correction itself.
Yes. So what is very important here, especially for me, because I'm very patient and I want market to confirm my wave counts before I act, what would I want to see that this whole bullish price action since yesterday is fully retraced. So in that case,
so I move below the low of D.
I'm tracking also, just a second, I'm tracking a daily candlestick formation. And I definitely don't want to sell against this bullish reversal candlestick. We have seen here an opening, a new low, and close at the highs. Okay,
outside white candle. Yeah.
So bullish interpretation for candlestick formation suggests that we may see a move to the upside. So bulls are very strong, at least they were in the last 24 hours. So before I may go short, I want to see that all of those bulls will be completely erased, because only then this would be my confirmation that bulls were only temporary and that bears will still take over the direction, because it was a very sharp price. If the rise would be slow, very choppy, and very overlapping, which would give us an evidence that this was, after all, a corrective bounce that would fit into wave E perfectly based on personality of the move, then I would be already maybe looking for shorts at these levels.
Grega, can I ask you about Bitcoin? Because it looks like we're in the third drive on the daily. Could that be a ending diagonal in Bitcoin?
Second, just pull it.
It's been tough to call the bottom there.
Yes.
You can say that again.
Huh?
You can say that again. A market that has gone from 20,000.
I've been scaling in since 18 grand.
Yeah.
Only I had to sell my scale because, you know, all my money. Steve loves Bitcoin.
Oh, yeah. Buying it both hands. No.
Okay.
We've seen a break. You said what? An ending diagonal. Actually, that's a very interesting idea.
See the drive that you have labeled 3. Yes. And then the one you have encircled with a 3. And now we're making a new low. I was just wondering from an Elliott perspective if that's what's happening here.
Definitely worth of
that gives you 2,800 or so.
Yes, it's definitely worth of consideration. I mean, it's a wedge shape from basic technical perspective. And what is interesting that even ending diagonal and even my wave count that I showed here, both suggest that we may see a coming low here around 3,000. Okay. But of course, will I buy at 3,000? Not a chance. I mean, I would have to see a bounce in 5 waves. And then I would look for potential opportunities on the long side, because I will exactly know where to put my stops, where I will be wrong. At the moment,
and kidding aside,
I mean, we may get go much lower. Yes.
Kidding aside, I mean, fundamentally, I see no reason why this price is not also extremely overvalued. But even from a basic technical analysis, we do have momentum slowing. We do have a very oversold market. So I agree that roughly at 3,000, which is previous support resistance area as well, we might see a reaction higher, because it's about time to see a reaction higher. Now, personally, I wouldn't be looking for that reaction higher to be the beginning of a new impulse, but you know, who knows?
Yeah, I mean, why not a 38% retrace from 18,000?
Yeah, we've seen weird things happen in the markets. I mean, and fundamentals going out of the window for years and years. So, you know, I really don't care about the fundamental thesis, because that doesn't mean. I mean, fundamentally speaking, Bitcoin should have never made it to 20,000. That was clearly a mania. So, yeah, I agree. I mean, near 3,000. And with momentum slowing, if we see some kind of a strong move taking out that wedges resistance, yeah, we can easily see some follow through. And if we get some of the usual cryptocurrency volatility coming back to the market, it might even be a sharp move higher, right, Gregor?
Yeah.
Yes, but from a trading perspective, it's very interesting if we see an impulse, because even if that new bounce would be only temporary and corrective, it still may rise back to 4,500, maybe even 5,000.
Oh yeah, absolutely.
Impulse. So it can be still room that's what, 30%, 40%.
Yep. Something to keep in mind, guys, and it took me years to finally just be aware of it, is there's still another 2 weeks left for tax loss selling. A lot of assets, instruments are under water for 2018, so there could still be pressure on the losers going into year end. And after watching Grega, looking for one more low in S&Ps, gold rolling over, dollar heading up maybe into a top. Yeah, Stephen, you like the beginning of the month type of thing, so it might be New Year's.
Yeah,
they can't take tax losses after December 30th, I believe.
Actually, when Bitcoin hit an all-time high, it was in December, right?
Yeah.
Mm-hmm.
So it's exactly a year back.
Yeah, so people will want to, they're going to take the loss and try and reestablish. Then they carry forward the loss. And
you want to see something funny, Gregor? Turn this Bitcoin chart to a yearly candles. No, I'm not kidding. Just look at the 2 yearly candles.
Yearly, okay.
Yearly.
Yeah.
Yeah, it's
it's an inside year.
I mean, just look at this madness. This is
you could get a bullish candle for 2019 back the other way. Huh?
As we discussed, I mean, if we would see, I don't know, 100 candles to this level, it would be fine, normal, or maybe just 50. It will be 50 years, but I mean, just in a 1 year, definitely.
It's the epitome. It's the biggest mania cycle probably ever registered in the history of humanity. This
quite a roller coaster. In Chicago, they had a roller coaster called the Bobs, and it went straight, went parabolic in the roller coaster, and then you get to the top, and then it would do what Bitcoin just did. Scary ride.
As we discussed, everyone are looking at log scale. We have been discussing about log scale a lot. And what I noticed is that traders want to look at log scales if they are bullish.
Correction. Yeah, they see a correction. Yeah.
Yes, if they are bullish, they will look at log scale, and this may actually confuse them. So if you want to use log scale, rather try to use both and make some combination. Just don't stare into this log scale.
Yeah, first of all, if you want to use the log scale, the next area of apparent support on the logarithmic scale is roughly at 1,000, right, Gregor? I mean, the previous peak was roughly at 1,000, right? So, 1,150. Yeah.
Yes, I mean, and also 1,000 maybe would be a good value for Bitcoin.
Yeah, I mean,
you'll never get until it's $50. Steve won't think it's a good value, right? Steve?
No, actually,
Coach, it's 50.
Actually, Coach, I might buy it speculatively. I mean, at
come
1,000.
on! You're going to give me a stroke. I can't believe it. You know what? Mark Yusko had some impact on you.
No. Clearly speculatively, because if you're asking me where Bitcoin is going to be in 10 years, if I have to choose if it's going to be at zero or at a decent price, if I had to choose between the two, I would tell you zero.
Okay.
But, 10 years, I mean, if you ask me where the dollar is going to be in 2 years, I'm going to tell you a lot lower than it currently is. Does that mean that I'm selling dollars now? Absolutely not.
But you are buying metals.
Not yet. I want to see a new flash lower. Then I'm buying metals.
I already
have.
You are not.
I already have.
By Stelios.
I already have physical gold, and I'm keeping it. And I've had plenty of that since from much lower prices than we currently are. So I'm a long-term believer that gold is going to move higher as we keep inflating away the value of fiat currencies. There's no question about it. Gold is going to retain its purchasing power.
Yes. In Switzerland, they are selling gold cards, like a bank or credit card, where one on a credit card is split on, I don't know, 10 parts, and each small piece of it, it's worth $50 of based in gold.
There is actually a company called, if I remember right, Gold Money, which lets you deposit gold, and then you can use a credit card or a debit card. In essence, it's a debit card, and you can actually buy whatever amount you want. I mean, you can even pay like for 50 cents, and the amount on your balance just escalates, just oscillates with the price of gold, and you can actually have your savings in gold if you want.
I'm sure that Peter Schiff, if he will come in, will tell us more about that.
Oh yeah, absolutely. That
would be very interesting.
Yeah, I went to the grocery store with Bitcoin about $5,000 ago, and I happened to be shopping during a big breakdown day when it's down around 8%, and I had to put things back. I tried to pay for it with Bitcoin, and I didn't have enough. I had to return the bread and the milk and the eggs because my net worth dropped by 20% from the time I entered the grocery store.
Laughing apart, that's exactly what people what people in countries with hyperinflation have been experiencing. Yeah. I mean, in periods of hyperinflation, literally, what you needed to buy something now would be totally different than what you needed to buy the same product 3 hours later. So, that's what hyperinflation.
Like the Weimar Republic. And we have modern day examples, Zimbabwe and Venezuela.
The Bolivar in Venezuela, as the Zimbabwean dollar, has literally zero value at the moment. I mean, the paper you print it on is a lot more valuable than what you get with it. So there's no point.
We can see here.
We can see it.
Yes, it's like a credit card. And you can see each piece of this credit card represents a piece of gold.
Gram?
So the intention is like you go in the grocery store, and if there will be prices or whatever, you will give them this piece of credit card.
That's cool.
Full credit card.
ForexAnalytix subscribers, you're more than welcome to start paying us in gold if you like. We're going to set it up.
Pay now before it drops in gold. Pay us now.
Yeah, exactly. Buy yourself an annual subscription now before we go to
1,000.
Yeah, before we go to 1,000. Yeah, exactly.
Well, I don't have anyone on the docket, Steve, for today.
You do. He's called Grega Horvat.
Greg is always the best guest. So
that's very true.
But he's part of the team, so that's what I mean. Did you hear my my face poem that face is a place to learn markets, retrace, and not chase, and learn from a team hard to replace.
Yeah, but I'm going to give you the weekend to practice, and I want to hear the same thing on Monday, rapping. So you're going to rap that.
I can't. It's against my religion. I can't rap.
That's why I'm giving you the weekend, coach. You need to practice. Okay.
The Elvis rapping? I don't know. I don't think so. Anyway, what a great week of analysis here. And, great trading in the room. Blake was talking about Amanda slaying it, and a lot of very nice pips. And you know what, everyone's still here. So a real good time to take the trial, you know, get prepared. 2019, you could see a lot of opportunities are going to be here. And, you know, why go anywhere else when you have 5 different methodologies at the same place?
And don't forget their investment program, because I can tell you, I mean, we received yesterday's the monthly mail, you know, about their investment program. I can tell you that we have a decent amount of people subsidizing their ForexAnalytix subscription through their investment program, and it works perfectly fine for them. So, you know, don't forget that you can go to our investment program page on ForexAnalytix, and you can contact ForexAnalytix. You can kill 2 birds with 1 stone. One is check if you are at the right place for you, meaning at the right broker, at the right brokerage firm, because for your trading style, there might be a better opportunity for the safety of your money. And even if you are, or if you're not, you can then use ForexAnalytix as your introductory broker, and get back, and get back some of the commissions you just give to your broker to subsidize your ForexAnalytix subscription. So that's a great gift you can do to yourself, literally costing you nothing. Okay,
and
so that...
And don't procrastinate like Steve did. Otherwise, he'd have another couple grand to buy Bitcoin by now. So I know you waited too long. Anyway, thank you so much, Grega, for coming in today.
Thank you,
I really think we have the greatest team and the best FX webinar on the net. And everyone have a great weekend. And
you too, Coach.
Yeah, thank you so much, Steve. And remember, everyone, you know, I know it's important, it's money, but count your blessings. Don't forget to count. Don't just count your pips, count your blessings, because they're worth more than money. And I'll see everyone on Monday. Have a great weekend. Adios. Take care, Grega. Have a great weekend. And Steve and all you guys out there that are listening to us, smell the roses. Adios.
Adios.
Adios.